Short and sweet highlight after the break. First of all, we're talking about the longer consolidation happens, the more follow through you'll get when it finally breaks out. Know that. So at least you don't get caught the wrong way adding to it. But for those that would have been fortunate enough to catch this break out of this chop, and when I talk about what break out of what chop, consolidation boxes, rotation within a range is how your eyes have to fixate on a chart. Most people don't know that till they learn that. And the breakout below here, it's not easy to say this is the one, but we have clues with our OPP to give us higher probabilities of the when moment. And so when you look at this long down bar, that's essentially what this is. We just showed as a footprint. It could have happened there, could have happened there, because the consolidation box was forming in there. What gives you the probability that this was going to be the top of the box temporarily, and then this was going to be the breakout before it happens? Can't use price to predict price. You can't say, like we were talking about with opening up schools, and now people are for keeping them open because of the psychological damage that that it's affected with kids. But for people that for 2 years have been saying that, got pushed back because the data wasn't there. So of course now it's easy to say once it's proven. But let me get into the highlight again. Let me clear these illustrations. When should you think that this break might be over and we're going to pop? Because a weakness of many traders isn't just managing their losers and taking their losers. It's not leaving too much money on the table and letting a decent winner turn into a scratch or even a loser. Some of the worst trades you'll make are the ones that seem like small losers in your statistics, but they were a nice winner before they turned into a nice loser. And if you're mismanaging those, you're leaving a lot of money on the table and your statement's going to look a lot different. So what could get you consistent instead of just playing price and saying 70 is a good support area? It might be, but what if you don't have 70? What could you see in real time to give you a probability that this could be the bottom? And if I take this recording and I fast forward a bit, 300 lot buyer, not so much, but the shorts that were coming in, the little Johnnies that finally decided they didn't want to get short up here, but they'll get short down here. That's generally what you're going to see for the low, whether it's a daily low or a swing low. That's the ingredients. And then boom, this big one that came in, 71 3/4. And in real time, we've seen it, talked about it. Even before, you could see my illustration with the yellow going in, said it before I showed it. Be careful staying short because now you're seeing the evidence that we're going to get this bounce. You got to use something that could keep you objective, because if you're not consistently objective, you're not going to be consistent. Keep yourself safe. And remember, you're either in our group or on our charts.